Euro dollar trading down 0.27 of 1 bill, 136.40. Let's get straight to that because, of course, huge concerns about the Portugals, the Irelands, the Greeces, the Spains of this world. You know the acronym, I'm not going to mention it. 136.40 is where it's currently trading. But a flight to safety, well, people are looking at the dollar, taking off perhaps some of the more risk assets associated not only, of course, with Europe, but potentially as well with some of these, the Chinese growth story, the Australian currency as well, one that's been under a bit of pressure. 89.32 is where the dollar yen is trading. Mario Singh, though, is a co-founder and chief executive at FX1 Academy and joins us live from our Asia headquarters. Mario, given the oscillation we're seeing in opinion and indeed on the markets themselves, is there any such thing at the moment as a flight to safety, bearing in mind this trade could snap back very aggressively and a flight to safety, a flight to the dollar, actually could go back in your face very quickly?
Hi, Steve. Absolutely. Well, the theme really for the last one whole week was really risk aversion. What we saw, all the risky assets like the euro, the pound, and the Aussie, for the whole of last week, they had a bloodbath. All of them actually shed about 300 to 500 pips on the dollar. But while it does seem that the dollar is gaining some strength, I'm still inclined to think that it's still risk aversion because it is not backed by fundamentals at this point of time. We still see the dollar dropping some pips against the yen. So I'm not too convinced that it's dollar fundamentals. At this moment, it's still risk aversion because of the problems that is plaguing Europe and because of China's tightening of monetary policies right now.
Well, speaking of the dollar, the Fed chairman, Ben Bernanke, is going to testify on the Hill later this week, and we also will get more earnings from consumer-related stocks like Coca-Cola, Pepsi, Marriott, and so forth. So how will these data points, and also how will the Big Ben, if you will, move the dollar, at least short-term direction this week?
Short term, we do see that corporate earnings for all the big players are going to report some positive numbers. That's going to be good at this point. But at the same time, while dollar bulls are all feeding on all these data, I'm just a little bit cautious that all these data that's coming out of the US right now, it is really not kind of supporting the dollar strength. It is really to flight to safety. We saw how, in fact, in terms of low liquidity movements, there's a huge move in all the riskier assets. So while the US is going to be churning out good figures, at this point, investors are still not concerned, or rather, they're not going to be convinced that all this points to dollar strength.
Against the Japanese yen, how will it fare, given that we did hear comments from the Japanese BOJ, a deputy governor, saying that Japan will likely be in a soft patch, quote and unquote, before the summer months. We also have a lot of repatriation before the end of the fiscal year, around at the end of March. So ultimately, if you take a look at which ones will be more in favor as far as risk off is concerned?
It's going to be a real tug of war between the dollar and the yen at this point because both currencies still have that flight to safety. They have that safe haven status at this point. But while we are mindful that in the next couple of months, a lot of Japanese corporate earnings around the world will be repatriated back, that's going to have a huge boost for the yen. But at this point, because the dollar is losing a lot of ground on the yen, what is really the main theme at this point is still risk aversion because the Japanese yen is strengthening a lot over many currencies. It has hit, in fact, a one-year high on the euro. On the euro yen, it has dropped, it has plunged literally thousands of pips over the last couple of months.
Okay, Mario, let's just recap on this ugly contest because you're worried about China tightening, you're worried about the US recovery, you're worried about the soft patch in Japan, we're worried about sovereign issues in Europe as well. Is there a bull case out there?
I'll put it this way. No news really is bad news for the Forex market. As long as there's bad news, as long as there's good news, it's always great news for the Forex market. Whenever things are moving up, there's always a trade. Whenever things are coming down, there's always a trade. So in the Forex world, we really aren't too concerned in how that moves because if it moves up, there's always something to take. If it comes down, there's always something to take. Now, in the short term, obviously, what is interesting to note is that figures from the CFTC data report, as I was just looking at it, it is a full net short position on the euro. So for the euro dollar is still in a very strong downtrend. In fact, the figures that I'm receiving, there's a full net short of 44,000 net shorts on the euro, which is the highest shorts position ever since the euro was introduced 10 years ago. So that shows that many people at this point are climbing onto the momentum that euro is still weakening against the dollar.
Okay. And just very briefly, then, if I may, surely this is going to boot. I mean, we talk about this decline for the euro. This is what European manufacturers and exporters and a lot of politicians have been crying out for a long time. Is there a perverse medium to long-term effect, actually, from this decline we're seeing on concerns in the euro, that actually this could be exactly what we need to get this economy to turn around?
That's absolutely true. I also believe that in the short term, the low levels of the euro is going to start to spurt and really give the whole economic growth to the Eurozone a big boost. But at the same time, investors around the world, they need to understand that the whole Eurozone is going to be throwing their weight on Greece, Spain, Portugal, because the fiscal deficits of these countries are skyrocketing. The credit default swaps are at record levels over the last few years. So there's got to be that balancing act that they've got to do to ensure that Greece, Spain, Portugal are pulling themselves out of this whole the big hole.
Right, and Fitch saying that Greece's total obligations amounting to $290 billion as opposed to Lehman, which was just 140. Now, this brings down the big question. Amid all this volatility that we're seeing, there must be some profitable ways to make money out of those trades.
Well, I would just say go short, Chloe. At this point of time, for a Forex trader, we aren't too concerned as to whether it's going to be good news or bad news, but really for the Eurozone, for short term, really it's going to be short all the way down because there's so much momentum on the Euros going short at this point. So if really they're going to get, if the Eurozone is going to install or instill some confidence, there's really got to be a huge, either a liquidity boost at this point of time, or in fact showing something like how Abu Dhabi stepped in for Dubai. So there's really the huge neighbors all around Euro, possibly France, or Germany has got to step up and really show their support for Greece so that investors at this point can really start having some calmness in them.
Yeah, Murray, I couldn't agree more. I think these people will come in for the smaller, more peripheral nations. But the point is they are smaller. They are peripheral. Greece, for instance, is just at most a couple of percentage points of total EU 27 GDP. The fact remains these are peripheral issues, and unless we see the same kind of budget issues in Germany, in France, in the core of Europe, isn't this trade against the euro just wrong?
Well, I disagree that I don't think it's wrong because at this point, although Greece is a small part of the whole Eurozone, but what is important to note is that their deficit levels are the highest at this point in the whole of Europe. So while they say at this point that for Greece budget levels, or rather budget deficits, are about 12.7% of GDP, it is really quite a big concern for investors all around the world. So while the finance ministers of Greece, they're stepping out and saying that yes, they're going to keep their house in order, at this point I just still feel it's a little bit too much for Greece to handle at this point. They really would need the help of their bigger neighbors to come in and step up in their support.
Yeah, you know, on the euro issue, what's also interesting to note is that much of their short-term debt obligations actually maturing in April and May. So does this mean that maybe the euro maybe has had its best days yet, at least, that it has further downside to follow? How low?
I do feel there is some further downside because what's happening is that, in fact, we're going to see some bond auctions the last couple of weeks. Many investors are not really convinced on all the bond auction sales for Greece. So I do still see some further downside short term. Currently, I think the euro dollar is trading about 136 at this point. I do see some minor support about 134. So I still see euro dropping for about another 200 pips.
Thank you so much, Mario Singh, co-founder and CEO at FX1 Academy there.